Hello, everyone. Welcome to the online event, Business Strategy in Turbulent Times. Business leaders today must navigate a business environment very different to that of previous decades. We still have the COVID-19 crisis, and economic and political uncertainty has increased dramatically, and it's likely to remain on a very high level. We also see rapid technological change and increasing cross-over sector disruption. These profound shifts in the business environments offer leaders the opportunity to adopt new strategic approaches to better adapt these changing conditions and not only survive this kind of crisis, but also emerge from them successfully. In today's online event, we will outline the new rules of dynamic strategy that are essential for any leader to be successful today. I have not introduced myself yet. My name is Stefan Giesen. I'm the editorial director for business and economics at De Gruyter. I'm your host today for this online event. Please allow me to say a few words about De Gruyter. De Gruyter is an international family-owned publisher headquartered in Berlin, Germany, with offices in Basel, Beijing, Boston, Munich, Warsaw, and Vienna. De Gruyter has been publishing first-class academic publications for more than 270 years. In total, De Gruyter published more than 1,300 books each year, as well as journals and digital products. In addition to our academic publications, we also publish first-class books for professionals, for business professionals at all levels. For this reason, I'm very pleased about our successful collaboration with the BCG Henderson Institute, the strategy think tank of Boston Consulting Group. This partnership has led to a series of business books called Inspiring the Next Game. The series offered a set of perspective on emerging themes in business. It develops new and valuable insights from business, science, technology, economics, and society. Now it's my pleasure to introduce you to my guest, our keynote speaker of this online event, Martin Reeves. Martin is managing. Hi, Martin. Martin is managing director and senior partner of BCG's San Francisco office and the chairman of the BCG Henderson Institute. Martin joined BCG in London in 1989, and later he moved to Tokyo, where he was responsible for BCG business with Western clients. He is author of Your Strategy Needs a Strategy and numerous articles in Harvard Business Review, MIT Sloan Management Review, and other leading publications. In addition, Martin edits the series Inspiring the Next Game. 4 volumes in the series have been published so far. The latest volume, maybe you see it in my background images, is Dynamic Business Strategy. But before I give the floor to Martin, I would like to make 2 small, really small comments. You will have the opportunity to ask questions after the presentation. Please use the chat function in Zoom. Then I will read out your questions and address them to Martin. Furthermore, the whole of this online event will be recorded. You will find the video later on our social media channels or on De Gruyter's YouTube channel. But we will also be emailing out the link to all attending this online event. Martin, the floor is yours.
Thank you very much, Stefan. So let me share my screen. Can you see my screen? Yes, good. So welcome to this seminar, everybody. So I'm Martin Reeves. I lead the BCG Henderson Institute, which is BCG's think tank for new approaches to business. So BCG, the Boston Consulting Group, has a today's business, and we also think about shaping the art of strategy and organization to create the ideas that business leaders will need in the future. So we've been very pleased to cooperate with De Gruyter on a series of books to put into the public domain and share with a wider audience a set of ideas that are emerging in business, or which we feel will be needed in business in the future. So we have this series, Inspiring the Next Game. And by the way, that's the mission of the Henderson Institute, to inspire the next game of business leaders. And we have these 4 volumes out already on the science of organizational change. So the idea of changing organizational change, which is a very important topic for CEOs, into something more scientific and evidence-based and real-time. We have a book on Winning the 20s, which is about the basis of competitive advantage in the next decade. We have a book which is very topical right now on resilience. Every company and every institution's resilience has been tested during the COVID epidemic. And if we go back further, tested by the great financial crisis of 2008. So we have some this book on the science and the management and the practicalities of resilience. And then this latest volume on dynamic strategy. And then we have 3 more, which are in the pipeline, one on ecosystem strategy, another one on leadership, and another one on technology and strategy. So we hope that these are useful to practitioners primarily, but perhaps also to academics looking to the findings which are emerging from practice as opposed to theory. So I speak mainly today about dynamic business strategy, but I'll be dipping into the content of the other books as appropriate. So this is just to give you a sense for the content of dynamic business strategy. We have here's the table of contents. We have 4 chapters on updating the classical strategy playbook. We don't think that the classical strategy playbook is irrelevant. We just think that it's no longer a panacea. So we have some ideas to update some conventional approaches to strategy. The so-called rule of 3 and 4 that says that there'll be 3 profitable volume players in any market, and the logic for that and how that applies and where that doesn't apply anymore. We'll be revisiting the experience curve. We revisit time-based competition. We revisit the classical growth share matrix. But then we have the bulk of the book is on new capabilities, adaptive advantage, the idea of shaping an environment in order to win in that environment, as opposed to merely adapting or reacting to that environment. The idea is that capabilities are now part of strategy. A theme I'll talk about more in a minute is that strategy is no longer a discrete discipline. It's intermingled with technology and organization. And then we have some ideas which stretch the boundaries of strategy on the new logic of competition, on the challenge of very slow moving but profound changes in things like planetary demographics and climate. And then also the idea of multi-timescale or multi-spatial strategy, the idea that we need to conduct strategy on not just one scale, the scale of an industry, say, or the scale of weeks and months, but on multiple scales. So I'd be dipping into some of that today, but hopefully that gives you some sense as to what is in this book. Okay, so let's start then with strategy. I start with this because it has been questioned in the business literature. Does strategy still matter? And certainly, I think the strategy department and the planning process may be less important than they once were. But I would maintain that, and also, of course, there's a great emphasis now on execution and agility and technology. So there are many important factors which leaders need to consider. But I would maintain that strategy actually is more important than ever before. And my definition of strategy is any systematic pattern of thought or action which biases in favor of favorable outcomes. And if we look at strategy through that lens, anything which increases the probability of winning competitively, then I think this chart shows us that strategy is more important than ever. So here we see the not market performance, but operating performance, the earnings before interest and tax across industries, across all public companies, and over a long period of time, 1950 to the present. And I think what is interesting about this chart is that you can see that the gap between the high performers and the low performers is increasing. So here I show the top quartile and the bottom quartile of companies. And if I showed deciles, you'd see the same result. In other words, the winners are winning bigger and the losers are losing bigger. Furthermore, the probability, if you are a winner, of staying on the top line is also greatly decreased. It's easier to fall off the line. And therefore, the strategic choices we make are more important than ever, because this gap, this what I call the competitive spread, is actually increasing. Unfortunately, what this chart doesn't tell us is what is the strategy that we need to win in this new environment. So let's talk. We're talking about a new approach to strategy, a dynamic approach to strategy. But to put that in context, let us first talk about the baseline, if you like, classical strategy. So strategy is actually, of course, military strategy goes back thousands of years, but business strategy is a relatively young discipline. Starting on the East Coast of America, the term competitive strategy starts to be used in the late 50s and the early 1960s. And the tools from that period are still very much the core of many MBA courses and many textbooks and the practices of many companies, what I call classical strategy. And classical strategy is essentially based upon scale and position. So one of the first tools of competitive strategy was the experience curve, pioneered by Bruce Henderson, who was the founder of BCG, actually. But in that period, there was relatively little distinction between practitioners and academics, because everyone was essentially establishing this new field of competitive strategy. And so Henderson proposed the experience curve, which basically says that the cost drop proportionally for each proportional increase in unit volume. So in other words, the more experience you get, the lower the cost get. And so this can be a basis for competitive advantage. Bruce Henderson was all about the idea of sustainable competitive advantage. And for him, if you had a cumulative volume lead in an industry, then you had a chance at actually being the cost leader in that industry, and that would put you sustainably ahead of your competitors. So that was a very powerful notion. That led to, for instance, experience curve-based pricing in the semiconductor industry, and it led to the idea that market share was a critical determinant of competitive advantage and scale advantage and so on. Now, scale, of course, is within a certain set of boundaries. So if you say scale in a certain space, essentially you're talking about a new concept of position, which is also another important concept in competitive strategy. So also an innovation of Bruce Henderson was the growth share matrix that basically said that the ideal in business is a profitable business which has a high relative market share, so a high scale effect, a high experience effect. So we can call that a star business. And essentially he said that there's a life cycle to businesses. Businesses start off as question marks. They have low market share and potentially high profitability. They may move to a star position. They may move to a cash cow position, which is a low growth business with high profitability that funds other businesses. And that this may eventually become a low profitability, low share business, which came to be called a dog business. And essentially the idea is you need to balance sources and uses of cash across a portfolio of businesses. So there was a certain dynamic element to the strategy, but over very long time scales. And then we had Michael Porter's very important book on competitive strategy that essentially says that you're either differentiated or you're a cost leader. These are the These are the only two ways of having a sustainable competitive advantage. And again, this was associated with a very long-lived advantage. Porter famously said that if your advantage, if you don't plan to have your advantage for 10 years, then it's not really strategy, it's not really advantage. So this is what you might call static strategy or classical strategy or position-based strategy or scale-based strategy. So what's wrong with this? Why isn't that the strategy of today? Well, there have been a number of profound changes in the business environment, many of which have just created superficial change in business. We're now talking about one product that didn't exist, internet-based businesses versus physical-based businesses. These are trivial changes in themselves, but the point is, how do they change the basis of competition? And essentially, the marginal cost of information has gone to zero with computing power and the low cost of computing power, and the world has become very connected. What is the implications of that? The implications of that are that you begin to have a lot of unpredictability. You begin to have a lot of change. You begin to have a lot of very rapid change, and also the context, the broader context, begins to be as important as the company. So in the simplest version of strategy, you think about the company and its products and its competitors and the market it operates in, a very narrow view of strategy. There was this famous book in social psychology called The Person and the Situation. And the idea was that psychologically, we tend to overweight the importance of the agent and underweight the importance of the context when explaining some social or psychological event. Well, the same is true of strategy. This view of strategy where it's about my product and my competitors and my customers, and that's all I need to think about is really long gone. We now need to think about the ecosystem of the company, the collaborating companies of the company. We need to think about the gyrations in the economy. We need to think about the intersection of politics in divided societies and business. We need to think about social permission. We need to think about the natural environment and whether we're seen as a sustainable company or whether we are blacklisted by sustainable investment companies. These are all connected issues. So we really need a form of strategy that speaks to all of that, this broader context and this unpredictability and this change. Now, this probably is the most important chart I'll show you today. It looks a little dull, but the content is very important. So what we have here is essentially we have a plot of what I call the decay rate over time. Now, what is the decay rate? So on the vertical axis, you have total shareholder return outperformance. So what that means is you can think about that as relative performance. So relative to my industry, how much is my company outperforming? And the question that this chart addresses is, if I am outperforming my industry, let's call that a premium, a competitive premium, how long does that premium last? And so we can see that in the 1980s, essentially the outperformance rate was about 15%. In other words, on average, about 15% of my competitive premium will disappear year by year. So what does that mean? That means that if I'm a leader today in performance, I can reasonably expect to be a leader in say 8 or 10 years' time. And that jives with my experience. I joined BCG in 1989, and leading companies in many industries used to be leaders for a decade or more. So essentially, a static approach to strategy was perfectly fine. The chart on the right is today's outperformance. So it's in the 2000s. It looks over the period 2008 to 2013. And what you can see is that the decay rate is about 100% on average across all public companies. It's a little more, a little less in some sectors than others. But what does this mean? This means that if I'm a leader today, I almost definitely will not be a performance leader tomorrow. So the implications of this are quite profound. What it means is that in many cases, pursuing sustainable competitive advantage may be futile. Maybe we need to pursue serial temporary advantage. In other words, maybe we need to constantly renew our advantage. And that's where the title of the book comes from, Dynamic Strategy. So how do we think about constantly not just exploiting and extending our competitive advantage, but constantly renewing the company and its competitive advantage? So this introduces the concept of ambidexterity, which was pioneered by by Michael Tushman, the academic, who's just got a wonderful new book out on the topic. And so the idea is that it's always been the case that not just in business, but in life more broadly, any organism or organization has the job of running the business, running the organism, but also renewing and reinventing the organism. You can't be successful forever. So in Bruce Henderson's time, that period might have been 10 or 20 years. Over a period of 10 or 20 years, you need to renew the business. So that's a managerial career. But now we need to renew it every year. So in other words, it becomes the daily work of business to both run the business and reinvent the business. And we can measure how good our companies are doing that. And it turns out to be a very hard thing. And only about 2% of companies turn out to be very good at both running the business and reinventing the business. Why? Because it's a sort of paradox. If you imagine your boss telling you in the first half of his sentence saying, you must run the business very efficiently, meet your budgets, squeeze every last cent out of the budget, run with 100% efficiency. And then he completed his sentence by saying, but break the rules, innovate, take risk, use your imagination. You would feel that there was a contradiction, and there is a contradiction, but living that contradiction and constantly balancing the contradiction is now the job of business. So that is something we talk about a lot in the book, the practicalities of living this contradiction and balancing these two important forces of running and reinventing the business. So if the idea of classical strategy is to have a dominant position, a dominant and sustainable position, what is the idea of dynamic strategy? Well, the things that we are trying to optimize or maximize, I think, are a little different for dynamic strategy. So essentially, if a classical business is trying to maximize efficiency in a relatively stable business, a dynamic business is trying to compete on the rate of learning. So in other words, it's trying to learn new things faster than competitors. And of course, that leads to very different consequences. And the first of which is, what do you measure? Because efficiency is a very good measure of how well you're running yesterday's business or today's business, but it doesn't really, there's no rate of change involved there. It doesn't tell you how much better you're becoming at learning new things. So we need to, for instance, measure things differently. We need to set up the organization for learning. It means competing in ecosystems. One consequence of the more connected world is that, so 10 years ago, only one of the world's largest companies was actually a multi-hundred company collaborative ecosystem or platform-based business, as some people call it. Now, 7 of the world's largest companies, last time I checked, a couple of months ago, were ecosystems business. So that's a very profound change in business, right? You've gone from the unit of analysis being the individual company, competing with other similar competitor companies in an industry, to ecosystems which span across industries and which are collaborative arrangements of hundreds of companies on a common platform. That's a huge change in business. So now, when we say nowadays, let's have a good strategy, what is the unit of analysis? The unit of analysis is essentially having a healthy position within a competitive ecosystem, which is a very different concept. It's beyond the enterprise. You don't have complete control. There's more unpredictability, and so on. Also, we need to compete on resilience. Some of the changes that we're dealing with in business are relatively linear, relatively slow moving. Other changes, for instance, the financial crash and the COVID epidemic, are unpredictable. We need to be able to thrive in an environment where we may have sudden and unanticipated shocks. In fact, we've worked out that these shocks are not just little periods when the rules of business are suspended. They actually are the periods when most of the long-term performance of companies are determined. So we shouldn't think about crises as exceptions to the norm of business. They very much shape the long-run success of businesses. We must compete both in digital and physical worlds. Some of our markets now are purely digital, and that may increase in importance if the idea of the metaverse or the digital multiverse is realized. So we must think about the physical and the digital dimension to businesses and compete in both. And then finally, I've just actually launched a book with Harvard Business Press called The Imagination Machine, which is about the role of creativity in strategy, because the new approaches that we need, some of them will be based on linear learning from a changing environment, but others will be acts of imagination that we then elaborate and realize, an entrepreneurial approach to strategy. So these are some of the new elements of dynamic strategy that companies now need to master. So let's double click on a couple of those. So resilience. Resilience is a very common word right now. Everybody is thinking about resilience because their businesses have been disturbed by COVID. Be it Stefan's business of books, the airport bookstore where we used to buy most of the books for our travels. Well, we're not traveling anymore, so we're not going to those bookstores, through to airlines and hotels. Many businesses had a profound shock. Everybody's talking about resilience, but how do we operationally implement with discipline and precision the idea of resilience? So this chart shows schematically performance over time for a non-resilient company and a resilient company. And you can see that there's, in some cases, we have a pre-warning of a shock. In some cases, we don't have a pre-warning, but we have the possibility of preparing for the possibility of a shock. Then we have a shock, and the shock takes down, disturbs the business. It may disturb it a little, it may disturb it a lot, as in the case of the red line. And then we have a period of recovery, and that slope may be very steep, as in the case of the green line, or very shallow, as in the case of the non-resilient company. And eventually, somebody will stop talking about challenge and start talking about opportunity, because the changes in the markets will be an opportunity, a disadvantage for some, usually for incumbents, but an opportunity for attackers. So actually, by measuring the area between these two curves, we can actually measure resilient companies, and we can measure companies that are consistently resilient across time, and we can put a value on resilience. And we can also see from this that resilience is a multi-timescale phenomenon. We have the timescale of anticipation and preparation. We have the timescale of buffering or reacting. We have the timescale of reacting to change, for instance, adjusting one's distribution systems. And we have the timescale of shaping and reimagining businesses. And we've actually done that for all public companies during the COVID epidemic. And the really interesting thing is that you might think about a crisis as a time for retrenchment, for focus on the core business and so on. But actually, it turns out that differentially speaking, competitively speaking, a crisis is the best time to leapfrog your competitors. So the competitive spread, the gap between the top and the bottom performing companies, actually, on average across crises across the last 30 years, has actually doubled during the crisis. And that is also true of COVID. So the wrong way of looking at resilience is to say, okay, let's retrench, we have a shock. Okay, my demand level returned to 97%, I'm fine. The right way of looking at it is for an opportunity for differential advantage opposite competitors, and to reinvest and to invest in reimagining the business and out-competing your competitors in growth. I'm going very fast through these ideas today, but I'm just trying to give you an introduction to some of the ideas in the book. And if you can be thinking about your questions or your comments, because in a minute we'll be opening up for questions. And then we have the imagination. So one of the interesting things that we did during the COVID crisis is we looked at the the transcripts of investor calls when public companies talk to their investors. We looked at when they talked about COVID and how they talked about COVID. And what we find is that some companies are very agile. They talk to their investors immediately or even preemptively that such a thing is possible before it actually happens or soon after it happens. And other companies are very slow to react. They're very slow to discuss their plans with their investors when there's a change, a shock in the world. Also, we find that there's what I call a race to optimism, which is an opportunity. A crisis always ends up being an opportunity for somebody, and using natural language processing, you can find companies that are very quick to use the language of opportunity and the language of reimagination and shaping, and other companies that never get there, even at the end of the crisis. They just see the crisis as something to be reacted to and coped with. So we just published this book, the Imagination Machine, which essentially is about the idea that companies, in a sense, are imagination machines. The great companies of today changed the world in some way. They started with an idea, something imagined, something that wasn't the case, and they made it the case. This is true for the first automobile, the first smartphone, the first computer. It will be true for the first workable quantum computer. And some companies, a minority of companies, actually fully incorporate creativity and imagination into their strategic planning processes. And this is a very important part of dynamic strategy, because in the long term, growth will rely on innovation, and innovation will rely on imagination, the ability to think about things which are not yet the case, but which could be made to become the case. Now, I've been speaking, and I think this is my final chart. I've been speaking as if there is one approach to strategy, to dynamic strategy, in today's environment. So a simplistic way of taking what we're talking about today would be to say, well, we used to do position, and now we need to do a dynamic reinvention. And so the new approach to strategy is dynamic. The truth is a little more complex, because another thing, which is another profound change in strategy, is that the variety of strategic environments, the diversity of strategic environments has increased. Increased with respect to what? Increased with respect to three variables. One of them is unpredictability. How unpredictable is my environment? There are still some relatively predictable industries out there. For instance, the funeral urn industry, the little jars that you put your grandmother's ashes in when she passes away. That industry is driven by demographics. It's relatively predictable, but most businesses on average have become much more unpredictable. The second variable is malleability, shapeability. Some businesses, like quantum computing, for example, are in the process of being shaped by the pioneers in those businesses. Other businesses have a relatively well established structure until it is disrupted. And then the third one is harshness. Coming through the COVID environment, the hospitality industry was extremely harsh. 90% collapse in demand, or of that order of magnitude, depending upon the geography. And other businesses have been growing throughout. Anything to do with digital distribution has been growing even more strongly during the crisis. So actually, a more profound way of looking at dynamic strategy is to say, what is the approach to strategy I need in my particular environment? So in a predictable environment, we may use a planning-based approach to strategy. In a fast-moving environment that isn't shapeable, we may use an adaptive, a learning-based approach to strategy. In a relatively new space, we may use an entrepreneurial or a visionary approach to strategy, which is more creativity based. In an industry where we can collaboratively disrupt using ecosystems, we may use what I call a shaping approach to strategy, whereby a group of companies collaboratively disrupts an industry. And sometimes we fall behind to change, and our performance suffers, and then we need a renewal approach to strategy, whereby we need some massive and rapid pragmatic change in the business to put the business back on track. Now, the final thing I'll say is that one of the interesting things that's happened during my career as a business strategist is that strategy has ceased to be a discrete discipline. Why? Because each of these boxes is an approach to strategy, but it also requires a particular type of leadership, a particular type of metrics, a particular use of information technology, a particular type of organization, a particular type of culture. The culture of a planning-based business is quite different from the culture of a visionary-based business. So you'll find in the book some discussion of what I call strategy stacks, which is what is the coherent combination of strategy, organization, culture, leadership, all of these things. What is the coherent combination of parameters that is required to compete in each of these different environments? So that's the end of my presentation. I think we now have 20 minutes for questions. So I'd definitely invite you to put your comments in the chat, and Stefan will put them to me, and we'll have a bit of a discussion.
Yeah, good point. Thanks, Martin, for the really good keynote. There's some questions or comments on in the chat. The first one is about the possibility to obtain the PDF of your presentation. Okay.
I think you have people's email addresses, Stefan, is that right? And so we can send you the PDF of the presentation. Yeah, sure.
And I will also add that we record this whole event, and you also get the link then to this event. You can see the whole presentation again and again. One of the audience asked about, he mentioned that one of the non-market factors is climate change.
Mm-hmm.
And he said that he's, from your presentation, that the planet remains a generous source of physical resources for business without discussing the limitations, whether scarcity or political motivated scarcity. And Andrew asking you, what are the limitations in your view?
Right. So I briefly referred to that, but I didn't say a lot about it. Yeah, I think this is one of these contextual, one of these traditionally you could say non-business factors that has become a business factor. So nowadays, if I'm an oil company, I can't just continue pumping oil and think only about the classical factors of strategy. I also have to think about things like, will we run out? I have to think about things like, will I be socially mobilized against for the carbon dioxide that my products produce? Will I be legislated against? Will I be mobilized against? So we have to think about planetary limits. We have to think about alternative business models. We have to think very hard about this word sustainability. We have to think about reputation. We have to think about politics. It's not yet a book, but it could easily be a book in the series. We have an approach called Sustainable Business Model Innovation that is attempting to link what I call the two S words in strategy. One of them is sustainability, and the other one is sustainable competitive advantage. In practice, these words have almost nothing to do with each other, but they should. So our methodology is based, essentially it's a modification of business model innovation, and it essentially says, test the sustainability of your business model by expanding the boundaries of the business, the time and spatial boundaries of the business, find out where your business model is likely to break, and then fix it with a number of transformational moves, such as, for example, creating the recirculation, the marketization of byproducts, or creating circular business systems, or by linking ecosystems. So right now, this is a sort of a fringe methodology that a few companies are implementing, but I think many companies, as we breach those planetary boundaries, will need to deploy these approaches, and that will become one of the most exciting areas of innovation in strategy. So I very much amplify the comments of the speaker. Just one more note on that is to say that we will need to do this more than once, because of course, when we do shift towards more sustainable business models, we will create new scarcities. One of the things about bottlenecks is if you solve for one, you usually create another one. So for example, imagine that we move to battery stored solar power in our power systems, then the rare earth elements and the metals which are used to make batteries and motors will become rate limiting. So that's a strategic issue, right? That's an issue that needs that could become a competitive disadvantage for a company if it doesn't think about those things. So I see sustainability as a new growth area and a new area of innovation in strategy.
Thanks, Martin. There's a praise in the beginning, like your storyline and proof points. She said also that agree that the role of strategy departments is changing a lot. Her or my experience at The Edge focus on more on intelligence, drive strategy formulation in open or inclusive approaches, engage in execution. And
yeah, I think
the question is, what is your vision to it?
Right. I think the essence of strategy changes, and the essence when we talk about strategy, sometimes we're talking about the problem-solving aspect of strategy. Sometimes we're talking about the procedures of strategy. Sometimes we're talking about the tools of strategy. Sometimes we're talking about the strategy department. I think each of those has to change in a way. So let's start with the essence of strategy. I think strategy moving forwards will, of necessity, because of the sorts of things I've talked about today, be more dynamic. It will be more contextual. It will need to consider the context. It'll be more algorithmic. It will involve more digital data, more digital tools. It will be more social, more open, because the boundary of the firm and the boundary of the industry have really been very much breached by digital technology. We can now reach much further with information. And I also think the strategy will need to become more ethical. As strategy breaches planetary boundaries, and as social polarization increases, strategy will become politicized. I remember when I first joined BCG, we had a number of boxes we had to check if we were designing the strategy of a company, and one of them was the social political environment. And somehow during the era of Reaganomics, everything became about the TSR and the NPV, and that box sort of disappeared. Well, that box is now back with a vengeance. Absolutely, the activities of companies will be highly will have a political dimension. So that's the essence of strategy. That therefore changes the tools, and that therefore hopefully changes the role of a strategy department. I say hopefully because we know that unfortunately organizational structures have great inertia. So in many cases, they may not change immediately, but the need is for them to change. So the idea that a strategy department is a small group of very brainy people that designs top down the strategy of the company, which is then rolled out by other employees. I think this is a thing of the past. I think there are new things to learn. So the strategy department is an orchestrator of learning. I think there's data to be captured and analyzed. So I think competitive intelligence and environmental intelligence becomes to the fore. There is collaboration to be orchestrated. So there's this wonderful new book by Christian Stadler called Open Strategy. Strategy is becoming more open, and not just in digital ecosystems, more open more generally. We now have the ability to reach out to suppliers and customers and incorporate them into the strategy process. So hopefully all of our strategy departments will be behaving very differently in 1 or 5 years' time.
Martin, we have 10 more questions. We have to see how if we can answer all the questions.
Yep.
Some of the attendees said you reference to the 5 new imperatives of competition. And
yes.
The question is, do you believe that competing for talent or skilled workforce could be the 6th?
Yes. So I talked about the imperatives of strategy, but I also talked about the strategy stack. In other words, how strategy intersects with organization. So with that broader view, also incorporating the other elements, my strategy stack for the future, my broader version of the 5 imperatives I gave, one of them would be competing on the rate of learning, as it would be the headline for strategy. Essentially, all the things I talked about are some variant on competing on the rate of learning. Then I think we have organizing intelligently. In our generation, if we use the word organization, it generally means a stable hierarchy of relatively stable roles, human roles. But I think in the future, I think our children, when they mention the word organization, what they will mean is a synergistic combination of algorithmic and human intelligence. So we'll need to reconceive the organization. I think we'll need to be much better at change management, because everything I've talked about implies a lot of change. And we know that there's nothing more broken in business than change management. The soft approaches that we have to change management just don't work. 75% of the time, major change efforts fail. So we need more evidence-based change. Then we come on to the human imperatives. I do think that we're going to need more diversity and more purposefulness to attract employees, to attract the millennial generation who are far more sort of ethically sensitive about the purpose and the broader impact of business. A cognitive diversity, with all of this change and this need for reimagining businesses, we're going to need to not just hire compliant, hardworking types that follow instructions, but people who think differently. And then the broadest dimension is probably the social purpose dimension. Namely, we're going to have to make sure that our businesses are justifiable in human and political terms. So a big yes to that question, I think.
Good, thanks, Martin. Next question is one of my authors, David. He's asking, who are the 3 or 4 of the most effective business strategy professionals working today? Whom do you admire most?
Yeah, I'm very wary of case studies, because the thing is, if I mention a name, somebody will point out something that is wrong. And of course, nothing is forever. Many of these companies will fail. And so the founder of BCG was very hesitant to say, look at General Motors, because we know that one day General Motors is going to have problems, and there is no company that's perfect in all dimensions. But with those caveats aside, I will answer your question. I think that there is no company or strategist which incorporates everything I've talked about today. I believe what I say, but I also believe that it's hard to do all of this, but there are businesses which are very good at parts of it. So I think I admire some of what Amazon has done. Amazon is a pioneer in ecosystems. It's a pioneer in constantly reimagining the business. It's been successful not just once. Most successful businesses are usually successful with one business model or one line of products. They've reinvented themselves again and again. They've made pretty rapid strides in intelligent organization. So they have APIs that efficiently exchange information dynamically between departments, and they do think about the broader aspects of business too. Now, I'm aware of all the caveats, all the things that one could talk about. Monopolization and working conditions and all sorts of things. But on these dimensions, I admire Amazon, and I admire, let me just mention one more company. I admire the Lego company for their playfulness, their imaginativeness, just to mention a European company. So the motto of the Lego company is learning through play, which is both a philosophy for their product and also a managerial philosophy. And every year, the chairman thanks the employees of the company for doing things that they were not asked to do. And it's a very important symbolic ritual, because they want people to do things that they've not been asked to do. They want people to play and explore. Because, of course, biologically, I'm originally a biologist, play is a serious business. Biologically speaking, play is the engagement of the human imagination, and it is spontaneous, accelerated, de-risked learning. That's exactly what you want companies to be doing right now.
Okay, I hope that you said the quarter, but it's not the case. Do you agree with a 5-year strategy requires a 5-year budget? So, for example, organization, government, and so on and so on. And can you justify such conclusions?
Yes. Well, I think we need to think on multiple timescales. So if you think about the forces that are impacting business, we have a new timescale, the algorithmic timescale. We absolutely have to think about the governance of the millisecond, because many things in many businesses change that quickly. So what are the boundaries, boundary conditions, and so on? We need to think about the days, because digital change is very fast. The zero marginal cost of replicating software or modifying software means that organizations learn very quickly to imitate other and disrupt other organizations. We need to think about conventional managerial timescales. We also need to think about slow-moving variables. So one of the pieces in the book is on slow change. How slow change is actually as hard as fast change. If you have a slow demographic shift, you can think you've understood it. You can think you've acted upon it, but our research suggests that it's easy not to see things moving slowly outside the window. So 5 years. What isn't the case is that all planning should be carried out on a 5-year basis, and the 5-year plan we can assume to be accurate because we're in a very plannable world. This is not the case, but we do need to think on the 5-year time scale, the 50-year time scale, the 1-year time scale, the millisecond time scale. So there's another article. There's an article in a chapter in the book on slow change. There's also a chapter on multi-timescale strategy, how to think about optimizing strategy on different timescales. Now, the thing about a plan is, in today's environment, it's unlikely to be a forecast, but it can be a mental preparation. It can be thinking ahead in ways which may not literally hold as a forecast, but which sensitize you to what might change, what might be important on a time frame, like 5 years. So in that sense, yes, it's still important.
Okay, thanks, Martin. We have a lot of questions and 7 minutes left. What should we do? Should I go forward, or should I choose some questions? Or
well, I think let's pick a few questions, Stefan, and I'm happy to go a bit over time if you are.
Okay, good. Then I will say stop, please, to ask questions. I will go to all the questions now, and we see how long it takes.
And I'll give short answers.
Yeah. Is the double S link B Corps, or is it room for more? That's the next question.
Well, I think B Corps is one innovation in the area of sustainability. It hasn't been that widely adopted. For those of you that might not be familiar, it varies according to the country, but in many legal systems, it's a company's responsibility to maximize the wealth of shareholders. This has been challenged in some countries, and in others, there's been the innovation of the B Corporation, which is a corporation which is measurable and accountable in terms of social benefits as well as profits. So I see this as being an important innovation. It's certainly not the end of the story. For instance, I don't think we're going to defeat climate change merely through the innovation of B systems, but hopefully we'll see a lot more institutional innovation that is often bracketed under the heading of reinventing corporate capitalism in the years ahead.
Okay, thanks. Thomas asked, many of your new approaches to strategy require a change in the attitude or the behavior in the mindset. And can we, as a strategist, help the employees to do more open or new way of doing strategy?
I think so. I think this comes down to change management. I mean, change management has never really been thought of as part of strategy. But if the baseline of business is constant change, and change is very hard, actually the ability to change predictably or effectively actually becomes a strategic ability. So I think one of the exciting areas of business strategy for me is, and we've written a lot about this, is strategies of change, which essentially is about a number of things. It's about behavioral economics, which is understanding where to nudge a system in order to have it change, because generally speaking, one of the worst ways of changing the behavior of a group of people is simply to tell them to stop doing what they're doing and to do something else. That generally is very ineffective. But nudges, you've got the social psychology and behavioral economics of that. There's evidence-based change, which is we can actually measure nowadays across thousands of companies what works and what doesn't. We have real-time change-based strategies. We can figure out real time. It's interesting. We all live in these organizations, but it's very hard to observe directly what is going on. People give a verbal accounts of what's going on, but we begin to be able to measure, for example, where are people paying attention, which messages are traveling across the organization, where is opposition mobilizing, who communicates with whom, who's meeting with whom. We can measure these things real time. So we've been working with some companies that are working on those real time change management technologies. So I think there's a whole new discipline of you could call it real time organizational algorithmics and evidence-based change, which will become an important area of strategy, and some companies are actively pursuing that.
Okay, thanks, Martin. There's again a question to the imperatives of competition, of the 5 new imperatives of competition. And the question is, do you see certain industries more focused into one of the imperatives, or rather a balance between all 5? And what factor, in your opinion, determined on what imperative to focus on?
Right. Yeah, I do see that. I think not many industries nowadays think about themselves as industries, actually. So by and large, I think most industries, think about telecoms or consumer goods or streaming services or digital marketplaces. If you ask somebody in one of those companies, what industry are you in? They probably say we have a collaborative ecosystem and a digital platform which spans across industries. We don't really see ourselves as being in an industry. There are a handful of, and those companies tend to be very digital, very evidence-based, very dynamic. There's another set of companies that still see themselves as being parts of industries, and generally speaking, they're the industries that have been least disrupted or are still more discrete. And I'm thinking healthcare, education, and to some extent finance. So I think the relative conservatism of those 3 industries, in a sense, is an opportunity for attackers. And one of the interesting things that I think that's happened during the COVID period is that these industries, education and healthcare, where there have been many false prophets of revolution, well, we've actually seen some fundamental change in those industries. We've seen healthcare becoming virtual, the acceleration of vaccine testing and registrations. We've seen remote medicine. So I think we're beginning to see change even in the most holdout industries. But in some ways, the conservatism of you, I admire another strategist I admire is Warren Buffett. He often talks about psychological countercyclicality. In other words, your competitor's conservatism is your opportunity. And in those industries, I think in that sense, there is still a lot of opportunity.
We extend the online event to answer the last 5 questions. Is
Sure.
that okay for you, Martin?
Yeah.
Okay, the question from David is, how do you measure success today? Profitability or founding? And he used examples ABBA or Airbnb, which are not profitable, but considered as successful. Right?
Well, I think that's in a way, business has had it very relatively easy. I've worked in the non-profit sector and the for-profit sector during my career, and in some ways, business has had it very easy because the scoreboard was always very obvious in the for-profit sector. I could look at my total shareholder return, and if it was high, I could assume that I was successful. In the public sector, one almost has to think a lot harder. One has to think about, relative to my mission, what is my impact? And relative to the art of the possible, what is my impact? I think we're sort of coming back to that era in business. So to be profitable and not to grow, to be profitable and to be unsustainable, to be profitable but to be very disruptable and not very resilient, to be efficient but not imaginative. I mean, these begin to be liabilities in a very dynamic world. So our small contribution in this space has been to create a metric that we call vitality, because the problem with most conventional financial metrics is that they're backward looking. They lag success. Essentially, they measure the health of yesterday's business model. So vitality essentially uses machine learning to measure the prospective, to predict the prospective growth potential of a company. Now, you could argue that that doesn't incorporate all of the social dimensions, which we've also touched upon today, but at least it's a forward-looking financial metric. So I think, yes, I mean, this could be a longer conversation, but we'll need to think the metrics of success. In particular, we'll need to think about prospective growth and profitability, because the past is less and less a predictor of the future in business. And we also need to think about these broader contextual dimensions.
Next question is, Martin, how could the dynamic business strategy be implemented for effective ecosystem strategy?
So I'd refer you to some of our papers on ecosystem strategy for that, because it's a relatively rich topic and would probably take too long to explain here. But essentially, ecosystem strategy is different on a number of dimensions. Number one, you're not necessarily using your own assets and capabilities. You're leveraging of others. Number two, you don't have complete control, because by definition, you're collaborating with people outside of the legal boundaries of your company. Number three, it's highly dynamic. So business ecosystems, successful business ecosystems constantly change and need to change in order to stay relevant. It's also an area where it's been a little bit of a wild west, where we haven't really had good legislation, good regulation to control, to shape these industries, and that is now coming. Regulators are highly focused on reinventing antitrust policy or privacy policy, for example, or data policy or algorithmic ethics policy to apply to business ecosystems. So it's a very exciting space, one of the most exciting spaces in strategy. We've written a lot about it. If you look in Sloan Management Review or Harvard Business Review, or perhaps the volume in this series that will be coming out in March or something like that, Stefan? Early next year.
Yeah, early this year. We will publish. I would also mention, yes, that we publish a volume about business ecosystems in the series, and this will be published this year. I think at latest in summer. Yeah.
Wonderful. Yeah. So in the summer, look out for that book in the series, and that will deal with your question.
Good. Oh, the next question is a really long question. Here the person said, I understand it correctly that companies in many industries increasingly have to aim at disrupting the status quo. Yes. Is it related to the concept of blue oceans, where companies should try for new uncontested markets?
Yeah. Well, I think blue ocean is a very popular approach to strategy. The problem with new approaches to strategy is, I think strategists, myself included, are a little bit prone to panaceas. The one idea that will cure everything. I think blue ocean has its uses and has its abuses, but blue ocean is essentially the idea of defining and pursuing uncontested space, and that can be a good thing, right? If you're not going head to head with your competition, you're actually carving out a new area. That's great. I've seen it be used extremely incrementally. So in other words, you look at the product parameters on different dimensions, and you find a little niche where there is no current competitor, but there appears to be need, and you optimize for that. So that sort of incremental thinking is not going to help you to reimagine your entire industry. So I think you have to think about the depth of change required in the situation. And I think another interesting area of strategy is, one of the interesting things that's happening in strategy is it's going back to its roots, because strategy came from practice. And I think then was a time when a lot of new ideas were coming from theory, but now I think practice is preceding theory again. So in practice, we have a lot of companies being disrupted. We have a lot of people with a lot of experience of disruption in different industries. And I think we need good theories of disruption. You know, how do you disrupt? Is there one type of disruption? Are there many types of disruption? How does disruption happen? How inevitable is disruption? Are there different ways of responding to disruption? I think the practice is rich with examples. The theory is still a little bit impoverished. So I would see in that context, Blue Ocean has its uses, but it's not the entire story. Blue Ocean doesn't really tell me, at least if I stick narrowly. The problem with new buzzwords is they tend to become more and more all-encompassing in meaning. But if I go back to literally the books on Blue Ocean, then I think Blue Ocean can help me to figure out where to disrupt. It doesn't necessarily tell me what is a good disruptive strategy, or how does disruption occur, because targeting the area to disrupt is only one part of a disruptive strategy.
Thanks, Martin. There's a question about your views on stakeholder capitalism and roundtable, etc. So the intent of stakeholder strategy, I think, is good. The idea that it can't just be all about the shareholders and total shareholder returns, because that tells you nothing about social and legal mobilization against your company for breaching its social contract, for example. So the attempt was for the Business Roundtable to say, hey, look, stakeholders other than the shareholder are important. We need to consider those. My problem with stakeholder strategy is it's a little bit of a one-liner. So yes, we need to consider other stakeholders, but merely saying let's consider other stakeholders doesn't actually give us a new improved form of corporate capitalism. Because, for example, which stakeholders? How do you prioritize stakeholders? How do you measure your performance opposite different stakeholders? How transparent can you be with stakeholders about which ones are prioritized and which ones are not? And even if you could do all of those things, none of which are operationalized yet, it seems to me, this is just one lever in thinking about a more socially responsible form of capitalism. For example, it doesn't deal with regulation, it doesn't deal with accounting, it doesn't deal with strategies of sustainability. So I'd say, the Business Roundtable announcement its heart is in the right place, but there's much more to be done. That alone will not get us where we need to be. Thanks, Martin. The last question is a topic that we discuss sometimes in our meetings. The question is, which specific skills would you propose to teach in MBA programs, for example, Master Dynamic?
Yeah, that's a great question. And actually, surprisingly, maybe not surprisingly, I get asked that a lot by CEOs, because CEOs are thinking about, one of the ways in which we connect through to the future is through our hopes for our own children. And so CEOs, being in the business of business, are often thinking about, well, what should my son or daughter study in order to be equipped for tomorrow's world? So it's a conversation that I have a lot. And I guess my own view is, the obvious part of the answer says that, look, machine learning and coding and digital technology are clearly going to be more important. you know, we carry out this exercise every year called the Fortune Future 50, whereby we rank the world's public companies according to their future growth potential. And it's clear that there's a lot more growth to come from technology. So the relative importance of technology in business is already extremely high, and it will get even higher. So the first order answer is, you know, have your kids study computer science. But I think actually that there's a deeper answer, which is that as the routine cognitive operations of management get displaced by machine learning, relevant organizations and relevant employees will be focused on more unique aspects of human cognition. And so what are the things that machine learning is possible at some point in the future, it'll become possible, but right now, what are the things where there is little prospect of machine learning replacing humans? It would be in the areas of empathy, imagination, and ethics, which is why I'm thinking about those three things a lot in relation to organizations and strategy. So actually, I think that, so I have 5 children myself, and my guidance to my children is, I guess I'm nudging them in the direction of communications, the ability to tell a story, to communicate persuasively about a complex state of affairs. I'm making sure they have minimal basic knowledge in digital sciences and mathematics and statistics, but actually I'm pushing them more towards, I shouldn't use the word push perhaps, I'm encouraging them more in the direction of ethics and imagination and empathy, because those are the basic human cognitive traits that machine learning has little prospect of being able to displace in the next 5, 10, 20 years.
Many thanks, Martin. And now we are at the end of our online event. And I would like to...
I just wanted to thank Kevin for giving me some COVID sympathy. So my cough is in fact the recovering stages of COVID, but I'm fine. But thank you for noticing that my biggest obstacle today was coping with a cough, and I apologize for that.
Yeah. Also, I would like to take this opportunity to thank you, for example, or especially Martin. Many thanks for the fantastic keynote and explaining the new words of dynamic strategy and answering all the questions. It was really good. And also many thanks goes to the audience for the interesting questions. I would say Martin and I wish you all a good evening, afternoon, or morning, depending where you are at the moment. Goodbye, take care, and then stay healthy.
Thanks a lot, Stefan. Thanks to De Gruyter too for sponsoring this slightly edgy, but I think important series of books, and I hope that some of you get some use out of them.
Yep. Take care. Goodbye, everyone.